Now my dear students, move on to the chapter number 7 of your subject cost accounting, which is named as standard costing and variance analysis. Standard costing and variance analysis. Now before going to this chapter, I just want to revise again that point that when I started the subject cost accounting, I have explained you the functions of cost accounting. Cost accounting major function was to estimate the cost. Second, another function is to help the management in taking various decision making. So for various decision making, the methods were marginal costing, CVP analysis, break-even analysis. That helps us in taking various decisions, right? It helps us to plan out the profit, right? Now the next function of another function of the cost accounting is to have the control on the cost as well as control on the overall efficiency of the business. So when I use the word control on the cost, it means I have to have a control on the cost which helps the company to reduce the cost as much as possible, which will in return give the company a position to fix a competitive price to their product in the market so as to face the competition in the market. I repeat, cost accounting main function is to control the cost. Why we are controlling the cost? In order to have a competitive price, to be in a position to charge a competitive price to the product which is produced by the company so as to face competition in the market. So that gives us a possibility of reducing the price. That is only possible by reducing the price of the by reducing the price of the product. That is possible only by doing proper cost control. And for controlling cost, there is one technique which various companies use in their cost accounting, that is standard costing. Standard costing is nothing but it is a technique through which company have a control on cost by having a control in three different fields. One, the material; second, the labor; and third, overheads. If you are controlling all these three fields, definitely it will give in return the reduction in the price of the cost without reducing the quality of the goods. I repeat, when I use the word control on cost or reduction in the cost, that in return, it doesn't mean that we are reducing the quality of the goods. But control means only reduction in the price of raw material, labor and overheads, not reduction in the quality of the goods. So that is what we are going to learn in standard costing. So standard costing is nothing but it is a technique which is implemented by the company, manufacturing company, in order to have control in three different fields: material, labor and overheads. So let us have a look on put some light on this techniques, how it works. Now, as I told you, that concept of standard costing, continuous cost reduction is the goal of all firms for growth and survival in the competition. Continuous cost reduction is a goal of all firms for growth and survival in the competition. If you are able to reduce the cost by at least 2 or 3 rupees, that will help you, that will put you in a position to give a reduction in the price, that in a position that you will be able to reduce the price of the cost by 3 rupees. So that will make huge difference to your product cost, and in return it will help us to give a competitive price to the product in the market so as to face the competition. To reduce the cost, first we have to ensure. So what we will do to reduce the cost? I want to say that reduce the cost does not mean that reduction in the cost, reduction in the level of quality of the product. Reduce the cost means reduction in cost only, not reduction in the, we are not supposed to compromise with the quality of the product. The quality should remain the same. Because of globalization, customers are the king of the company and they required highest quality goods at a cheapest rate. Because of globalization, every customer is nowadays demanding for highest price at a highest quality goods at a very cheaper rate, and that can be done only with an effective quality control as well as effective cost control. So to reduce cost, first it should ensure that the costs are maintained. So for that purpose, standard costing is a technique which helps us in reducing cost. In this method, in this technique, we will first ensure a standard cost. Means we will first calculate a standard cost with some past experience as well as some knowledge, skill and experience of the cost accounting people, and taking into the condition, present production condition, market condition and economic condition, taking into consideration all these factors, past experience, market condition, economic condition and the normal operational condition, efficiency of the business and the nature of the business, we calculate a standard. So to reduce cost, first it has to be ensure that the costs are maintained at a predetermined level. Means you have to first maintain a standard, means we have to calculate a standard, means at this rate I will produce, and ensure that it should not, we are not allowed to go beyond that predetermined level. There should not be increase in that level when you are operating. So this is the intention of standard costing. So in these techniques, if you want to have a control, say one example, one practical example, forget about company, I just want to ask you, suppose if you want to control your weekly expense, suppose your weekly expense is 2000 rupees, including traveling, food, everything, in 1 week you spend 2000 rupees. Now you want to control, because it is a huge expense. If weekly 2000, that means in a month you are spending near about 8000 rupees. Right, that is a huge amount, because 8,000 is a salary which is given by the company to its driver, to their drivers. Right. So suppose if you want to reduce your weekly expense, that is 2,000. So what you will do? First, you will calculate from the various past experience. You will calculate the overall cost of the expense. Right. Try to see which expense can be reduced. You will maintain. You will fix up a level that this is the expense which I am going to incur. So I will keep in my pocket only from the experience, from the knowledge, from the expenses which I incurred regularly at a regular interval of time. With that knowledge, I just made a standard that I will keep in my pocket only 1500 rupees. I will keep in my pocket only 1500 rupees. So I set a target of my expense. I kept in my pocket only 1500 rupees. Now you know that Indians are always best when they are in pressure. You can see Indian team also. When they are in pressure, they play like anything. They play their best cricket. Last match which we experienced during some tri-series was going on. So at that time, India was given a target of 342, and that too in 32 overs. And Mr. Kohli played a very good knock in that, and we completed that target well within that. So if we are playing in a normal condition, then 342 was not at all possible in 50 overs also. But since it was a pressure that if you want to enter into the final, you have to score this score at this much overs. So we did that. So that is what Indian mentality. So this technique, standard costing techniques based on our Indian mentality, Indian people behavior. So when we put pressure on ourselves that we will keep 1500 rupees in our pocket, definitely biologically the whole conscience, the whole body will work in that direction, and we will do less expenses without affecting the quality of your work. Similarly, the same technique is used by the cost accounting people. What they do, they will first calculate the various rates. Right, various rates they will calculate, various quantity from the experience, from the past production process, they will calculate and take an average that for 1 unit what is the quantity required. They will set a standard, they will set a rate as well as they will set a standard for the quantity for units consumed for the production of 1 unit. Right, they will set a standard quantity. First we'll talk about material. Similarly we will do for labor and overheads. So I will first talk about material. So from the past production process, from the past experience, I will first find out what is the requirement of the raw material in quantity for 1 units. I will calculate that. right? And I will find out the rate on an average basis. I will find out the rate, right? So that will kept as a standard. I might manipulate the rate after taking average. I may increase or reduce, slightly decrease, and put the standard. And that standard is given to the instruction to the production department people that this is a quantity you have to use, right? So when they were given target, definitely all workers becomes cautious. Everyone becomes conscious that they had given target, so they have to complete in that, right? So they will work. At the end, what I will do, I will compare my actual production cost with the standard which I maintain. If it is more, that means something went wrong. It may be internal or external reason. If it is less, that means I am succeeded in my mission, but my work is not over. Because if my standard is 20,000, say an example, if the standard is 20,000 and actual was 18,000, so my job is not over as a cost accounting person. My job is not over. I'll find out what went wrong that my standard was over absorbed. I have taken over absorption because I have decided 20,000, but actually it was only 18,000. So 2,000 when I was estimating the predetermined cost or standard cost, I have taken some expense as over absorbed. So what went wrong, I will find out the reason and I will try to revise the standard. And if the standard is high, means standard is lower than the actual, then I will find out two reasons. One internal and one is external. Internal reasons are means because of why it is occurred, why this difference has occurred. Because of internal reason. Internal reason means methods of production, quality of the technology which we are using, the type of the technology we are using, if they are outdated or they are old primitive methods we are using, definitely that will increase the cost. Wastage which the workers do, idle time of the workers, all that internal efficiency I will check. Since internal things are controllable, whereas if it is external factor, when I check that the internal factor was efficiently working, so when I check that it was because of market changes in the price of the raw material, market changes in the quality of the raw material which we are purchasing, that made the difference, then it is uncontrollable. In that case, the company has to decide go for some diversification if they are not able to reduce. So this is how the standard costing techniques works. So to reduce cost, first it should be ensured that the costs are maintained at a predetermined current level and not allowed to increase. This is the main intention of standard costing. So first we'll predetermine the cost and then after that we'll work on that and compare the actual with the standard, and if there is a difference, the difference between actual and standard is called variance. The difference between actual and standard is called variance. Okay, so so all such variance are analyzed. The difference between actual and the standard are compared. If the difference is negative, then the company has to analyze for the internal as well as external factor. There are variance may be controllable or uncontrollable. If I am talking about controllable variance, I am talking about internal factors which is affecting the variance. And if I am talking about uncontrollable, that is the external factors, the market condition, the political condition, the economical condition of the country. That is because of that the difference arises. So all such variance are analyzed to identify the cause, take the corrective action and eliminate the recurrence. Means if we want to do, we will find when we are comparing the standard with the actual, there will be variance. That variance has to be checked, identify the cause, internal or external, then take the corrective action and try to take necessary steps so that it will not reoccur again in future. Okay, the concepts of standard deviation. Now when I am talking about predetermined cost, standard costs are not to be confused with pre-production cost or forecast. Standard costing are not forecast. Standard cost is not forecast, or it is not a predetermined cost also. Suppose if a contractor is giving a contract price, means suppose you are the contractor, you want me, I am the construction company, you want me to construct a building for you, so I gave a quotation to you. That is not construction standard cost, because that is the predetermined cost for that particular project. That is not standard. Okay, so don't get confused with standard cost as pre-production cost. No, it is different. And forecast. Sometime for a particular project you forecast the things. Forecast is different and setting a standard is different. So there is a difference between standard cost and pre-production costs. These are actual costs incurred in trial run, etc. before production start. For example, if the Defence Company of India is testing for a nuclear weapon, so they do testing. At the time of BJP government, they tested at Pokhran. So they tested at Pokhran how it affected. So that cost is called predetermined cost. That is not a standard cost. After that, they have just incurred the expense to just have a trial run. Right? After that, they started producing on that basis. That was a trial run cost. It may increase or decrease, but that is not the standard which is fixed by the defense ammunition making company. Okay, right? Whereas estimated or forecast. Forecast is what? Forecast is before starting any project, we are forecasting certain things. It is again not the standard. The forecast becomes the first step for standard costing. Okay, so there is difference between standard level, standard cost and predetermined production cost or forecast. Then when I am talking about standard, so what is standard cost? Standard cost expressed in money. It is built up for an assessment of the value of cost element. Its main uses is to provide base for the performance measurement, control by exception reporting, valuing stock and establishing selling prices. Standard cost is what? It is a predetermined cost which helps us to have control on the efficiency, check on the efficiency with an exception that the exception reporting, valuation of stock and establishing the selling price. It does not have anything contribution to the establishment of selling price, but it is only for the evaluation of the performance and the efficiency of the company, which in return will help us to reduce the cost of the product. Standard costing is a technique which compares the standard and the revenue with actual result obtain variance, which are used to stimulate means to find out the reason and improve the performance. So it is a technique which helps us to compare the standard with the actual performance to get the variance, and that variance will help us to improve the performance. Okay, now there are different types of standards. Now as I told you that from the past production process, from the past experience of the company's production process, we calculate the quantity used for various per unit. We calculate the rate by using certain formulas, certain techniques, right? So standard based on highest possible efficiency are not realistic. Means if I maintain that at this I will take highest price. See, my weekly expense is 2000. Example, if my weekly expense is 2000 and I made a standard that I will keep a standard of 2500, that means already you have taken an huge standard. Definitely in that you will be always below that expenses, because regular expense of yours is 2000 and you are maintaining a standard of 2500. So what is the use of that standard? That is unrealistic. Definitely you will be below that level. So that will not give you the accurate picture of the performance or the efficiency of the people who are working in the production. Right? So standard based on highest possible efficiency are not realistic, as wastage idle time cannot be totally eliminated. We always think that if I plan out my production process thinking that my laborers will be doing effectively, my machines will be effectively working, but it may not happen sometime. Your laborers may not be producing at the same level, they may not be working at the same efficiency level every day. The efficiency may go up or down day by day, right? The machines which you are working previously may not work in that same performance, may not give you the same performance as they were working in the last year. So if you are maintaining a standard with the highest possible efficiency, then it is not realistic, because as wastage idle time cannot be totally eliminated. On the other hand, if standards are fixed on the past experience, will result in perpetuating existing inefficiency. If you are working on a past experience and made a standard, in that your past experience has made you suffer that our workers are not efficiently working. So if you are not training them properly, and from that experience only you have made a standard, then you are not able to improve the efficiency of the workers, because on the past experience base you have calculated the things. So that is also not correct to take the standard on the past experience. Therefore standard need to be realistic as well as somewhat idealistic. It should be realistic as well as, means not higher efficiency level, not the lower efficiency level, but middle of that. So it should be idealistic as well as realistic. Then different types of standards. So when we are talking about standard, maintained a standard, there are different kinds of standard. One is basic standard, second one is current standard, expected standard, normal standard, and ideal standard. Now one by one we'll go through the point. Okay, let us start with some types of standards which we consider while calculating the standard. One is the basic standard. It is the one determined for use over a longer period of time. This standard will not change unless and until there is a requirement in the quality, change in the quality requirement. When there is a change in the quality requirements, only then the basic standard will change. Otherwise, the basic standard will not change. For example, if I am saying that I am producing shirts for various materials, right? So the basic material means basic meters of cloth which is used for preparing one shirt or stitching one shirt is 2 meters. Now that is the basic standard. 2 meters shirt is over, half shirt, right? But because since there is a increase in the obesity level of Indian people nowadays, most from the health department, they are finding out, the health department had made a survey that 40% of the Indian population are under obesity level. So since the obesity is increasing of the people, in that case they might have to change the basic to 2 meters to 2.5 meters. Like people like me, for me one shirt is made out of 2.5 meters. So in that case the basic standard is changed. Otherwise it was there 2 meters cloths for 2 meters requirement quantity for every shirt, for every person shirt. Understood? Then we have current standard. It is a scientific standard which is adjusted with the current level due to at a certain period because of certain condition or certain circumstances. There may be circumstances arised that because of which since you are thinking that our production may go with 20,000 meters of cloth, but there was a suddenly increase in demand because of Diwali or something like that. In that particular month there is increase in the current standard of the raw material use. So that is called current standard. Means according to the situation we might change the basic standard. Expected standard. Now this standard can be achieved only when all the works are carried at a efficiently, the machines are operating efficiently, the workers are working properly, allowances are made, normal waste and machine time down is taken. That is an expected standard. Matlab, we have taken enough provisions for all type of wastage, taking into consideration that all the factors of production are working efficiently at the standard level, which is sometimes not possible, right? Now normal standard, the average standard, the next standard is the normal standard. The average standard which it is anticipated can be attained over a future period of time. Means this is the normal standard which we think that in coming years we might reach to this level of output. Means since our company is growing, so we are thinking that in the coming year, certain period of time, we may get this level of production. Because if I start a college with that I started with 100 units, but I am thinking that in the near 2 years or 3 years I will reach to this level, number of students. So that is my normal standard. So I will focus on that to achieve that. Okay, and third one is ideal standard. This standard can be attained only under the most ideal condition. Means all ideal condition. There is no natural calamities, there is no sudden accident in the occurs. If such is the situation, then you can attain this standard, ideal standard. To attain the ideal standard, only the most ideal condition. It is a standard which can be attained under the most favorable condition with no allowance of normal loss. We are thinking that there will be no loss, no wastage, no idle time of working, no machine breakdown. We are thinking that our machine will work at 8 hours, means 8 hours. That is an ideal standard. So that is sometime may not be possible. So when you are talking about standards, we have to deal with various standards. One is basic, second one is current, third one is expected, fourth one is normal, and fifth one is ideal standard. Now As I told you, from the previous production process, we'll calculate rates. Suppose if I'm talking about material, I'll calculate a material average material price, average material rate. If I am talking about labor, I have to calculate an average rate from the past operation without with consideration of market condition and climate condition and economic conditions. So all that factor taking into consideration, we will calculate, sitting today, we will calculate the rate for future. So there are certain formulas on which I can calculate the labor rate. Please jot this formula, jot it down, this formula. This formula is very important because this will help you to maintain, means to find out the standard rate for labor. So standard overhead cost. What is the standard rate labor rate formula? Standard overhead cost of production department means total overhead of production expenses divided by number of labors for production, number of labor hours for production, sorry. To be very precise, what is the labor rate formula for the calculation of standard rate of labor? Standard production overheads cost amount divided by standard labor hour. Standard labor hours means total labor hours, estimated labor hours, not actual, estimated. That I estimated that for this much production, for 1 unit of production, I requires 2 hours, right? But for total number of units, how much hours? So total hours, standard hours divide, you will get a standard rate for labor. Or else you can, instead of taking production overheads, I can take machines, total standard, instead of taking labor hours, dividing with labor hours, I can divide with standard machine hours. Suppose in some of the company, labors are not working, but the machines are working for hours and hours and hours. So total production cost of production department divide by total machine hours. That will give me a labor rate. So such techniques are used to maintain the standard, to calculate the standard, not maintain the standard, but to calculate, to be very precise, to calculate the standard rate. Okay, there is one more percentage of direct wages. I can calculate it by standard overheads, standard overheads divided by standard labor direct wages to production department into 100. In this, we are calculating the percentage. So same percentage will be there for the next year. Either you calculate the rate in rupees or you calculate the percentage. Last year the rate was 10%. So this year also it will be, the rate will be 10% of the total production cost. Now, as I told you, first, in order to implement these techniques, first I have to maintain a standard, a benchmark. Then the actual work, the production department people will be given the target that you have to achieve your goal within this limit, within this target. So they will work with wholeheartedly, with full concentration and with full swing. So at the end they will find out the actual cost. So actual cost is compared with the standard cost. So that difference is called variance. The details provides controllable variance help the management. So that variance may be positive, that variance may be negative. If that variance is negative, there can be two factors, internal and external. Internal factors are controllable, whereas external factors are uncontrollable. So to detail prop into controllable variance helps the management to ascertain the amount of variance. I am talking about internal variance, internal factor. It occurrence, factor responsible for it, executive responsible for the executive responsible for the variance, corrective action required to reduce or to abbreviate the variance, means to eliminate the variance. So this variance will give us various more process like this, and that will help us to reduce the cost. How? After finding the variance, first of all you have to find out the variance, then find out the occurrence, then find out the factors who are responsible for it, then after that executives who are responsible for that variance take the corrective actions and reduce it or eliminate the variance. Okay, so these are the steps when you have to take in order to have the control by this technique.